Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. In this video, I'm going to take a look at two of the major currency pairs, the Aussie versus US dollar and then New Zealand versus US dollar. Both of them have similar chart patterns, both from the daily and the hourly perspective. I'm going to talk about them in this video, so let's get started. I'm going to start by taking a look at the daily chart of the Aussie versus US dollar. And I want to focus on these lows right through here. Low here, low here, low here. And in trading over the last week, we've seen two lows come down to the low of this swing area. This is a nice little floor here off of the daily chart. Move higher, move higher, move higher, and back down, testing that level. The bounce off the low from last week was modest, but nevertheless, somewhat real, but then rotated back down, testing the low of the swing area at 0.6334 to 0.6363. Now, to understand the dynamics of where we are right now, if the price moves below this level, that would open the door for further selling pressure. Conversely, if the prices move higher, we have to look for certain things off the hourly chart that would give the buyer some more conviction. So let's take a look at the hourly chart. And we take a look at the hourly chart for this currency pair. We can notice a few little things. One, last week the price moved above the 100-hour moving average. That's this blue line in this chart. We moved up to the 200-hour moving average and found willing sellers against that level before moving to the downside. Now, the corrective moves after breaking back below the 100-hour moving average have more or less come back up toward the 100-hour moving average and found willing sellers. In trading today in the Asian session, the price moved just above the 100-hour moving average, rotated back to the downside and moved back down to the lows. The low price is now testing the low price that we saw in last week's trading and moving just a little bit below that level, as you can see. But we have that 34 level on the daily chart, which also is just right below the low price from last week. If we get below that level, opens the door for further selling pressure. What would turn the bias around? Well, if the price were to find support here and move back above the 100-hour moving average and then above the 200-hour moving average, remember, it held resistance right here. Getting above those levels would give the buyers some more added confidence, give the sellers some cause for pause and some concern that the price couldn't get below the low prices that we saw off the daily chart, the low price that we saw in the trading last week. So that's the decision tree for the Aussie versus US dollar. Now let's take a look at the New Zealand versus US dollar. And we'll start by taking a look at the daily chart as well. And when we look at the daily chart, we also have a floor area here off the daily chart. This low stalled the fall and moved to the upside. We came back down toward this low right here, found support buyers and moved sharply to the upside. And in trading over the last week, we've seen the price come back down into this yellow area between 0.5739 and 0.5772. Guess what? We're going to need to get below the 0.5739 level on the downside to increase the bearish bias. We're currently trading up in the middle of that, right at the 0.5753 level to be exact. We see the decision tree for the New Zealand versus US dollar. You hold support down here and rotate to the upside, or stay below the 72 level, move below the 39.7 level, and rotate to the downside. Now let's go to the hourly chart like we did in the New Zealand or the Aussie versus US dollar and see what the technicals are telling us in that chart. And when we look at this chart, as opposed to the Aussie versus US dollar, which found willing sellers near the 100-hour moving average. In trading today, the price moved above the 100-hour moving average, and it looked like we had the momentum going in that direction. However, the price stalled ahead of the next key target, which came in near the 0.5796 level, also the 0.58 level. We also fell short of the 200-hour moving average up here at 0.58059. And so the price rotated back to the downside. We moved back below the 100-hour moving average. We saw the buyers turn to sellers. And as we can see, the price is now testing the low price that we saw in trading last Friday near the 0.57529. Below that level is that 39 level, that target level off the daily chart that we need to get to and through to break the support level off of that chart. So the decision tree for sellers for this currency pair is get below the low price that we saw from last week, get below the 0.57397, and it opens the door for the downside. Conversely, if we do bounce back higher, we need to get and stay above the 100-hour moving average, the blue line in this chart. If we're able to do that, then we'll start to look toward the 158 level, 157.96, followed by the 200-hour moving average at 0.58059 level. If we get above those levels, then the sellers are going to have some pause for cause. The buyers are going to have some confidence that the price can go higher and we could see a rotation and more upside probing for the New Zealand versus US dollar. So overall, both the Aussie and the New Zealand versus US dollar are testing some key support levels off the daily chart. If the price breaks below those levels, it increases the bearish bias. Conversely, the price is trading below some key resistance off the hourly chart that would need to be broken in order for the buyers to take back more control and give the sellers some cause for pause. That's my look at those two currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.